The rates are so high, can I afford my new mortgage payments? Hey everyone, this is Zaid Hanna with the Hanna Group here at Real Estate 38. And the topic today, the rates are so high, can I afford my new mortgage payments? Well, let's break it down. That's actually really easy. So I've made this calculator that breaks everything down from your mortgage payment, PI, principal and interest, taxes, and insurance to calculate your PITI, out-of-pocket cost on a monthly basis. Now, granted, taxes are paid twice a year and insurance is paid usually once a year because of the amount being about $1,000. However, we're going to break everything down here to the monthly basis. So let's take two examples. Let's go back to March. Now, March was the peak of the pricing for pretty much here in the US. It's not only Bay Area pricing. We've seen the cool off pretty much where March was being the tip, and now as we're seeing the market and the prices are retracting, and so far we've retracted about 20 to 25% depending on the neighborhood. So is there a correlation between for every 1% in interest rate translates into 10% increase in your mortgage payment? That's why we've dropped 10%. We're about 2.5% up in interest rate. That's why the market is about 25% lower, of course. So there's a correlation to that. So actually, at this point, let's take an example of 1.65 million. That was kind of about the average for 1,500 square feet, about San Jose, Blossom Valley, or Cambrian, or some evergreen pockets. Of course, this is not Los Gatos or Los Altos, but I'm just, again, giving you the average so you can actually analyze the number. So if we take a property that sold back in March at 1.65, with the interest rate at the time of 3%, of course, you would put down 20%. So 20% of 1.65 is about $330,000. And the loan amount would be 1.320. With 3% interest rate, you would look at a monthly payment of about $5,557. Your taxes will be $1,718, and insurance being about $1,000 a year, so we'll count about $80 a month. The total was $7,355. That's before the market change. That's with the interest rate being 3%, and the market was actually going up crazy. So about $7,400 out of pocket to own that $1.6 million home with the rates at the time. Now let's compare it with real time. What's happening to the pricing, what's happening to the rates. So the pricing, again, has gone down about 25%, so we'll count that, and we'll take some a mortgage payment or interest rate of about 5.25 from a local credit union that we could refer you to that you can get the same rate today, and that's about 5.25. So let's go with that example. We just listed a property at 1250. We've had, by the way, during the open house, 40 people at the open house. So the buyers are still out there. They're just saying, I'm not willing to pay that high price that we saw back in March, April, and May. If it's priced correctly, I'm going to enter the market today. So let's take the price point of 1250, $1.25 million. 20% of that is 250 down. Mind you, that is about $80K lower than the price point of March. So $80,000 stays in your pocket. Loan amount would be about $1 million. So at 5.25 interest rate, the mortgage payment was $5,520 in comparison to $5,557. It's actually lower on the mortgage payment. Now, property taxes, that's the savings. That's what's making this market more attractive when you look at it on a monthly basis. That's about $400 cheaper. So taxes are $1,302 in comparison to $1,718. See, taxes don't really go backwards. They always go up. That's why they put Proposition 13, where you can't raise it more than 3% a year here in California. But regardless, you're saving about $400 a month. That translates into almost $5K a year. Insurance is $80. So the total PITI is $6,900 versus $7,400 in the previous market. So you're actually saving $453 on a monthly basis. Now, I understand there are layoffs. I understand there's bad news in the market. But if you've been waiting to actually enter the market at the right time and your job is actually secure, this environment is a lot safer for you to enter than the previous market because we've seen buyers actually put $100,000 and $200,000 above appraisal because the property wouldn't appraise. Now everything is appraising because we can get comparables from the past 3 months that are in line with today's pricing. So as I break these numbers down, my goal is to shed some light on the numbers. I'm a numbers guy. My nickname is a data guy. So if I see change in the environment, I want to know. I want to know what changed. Is it positive? Is it negative? But today, actually, now imagine if we can get you a deal at 28% discount. Can you save moving forward where your taxes will continue to be below $1,300 a month? Yes, by the way, that's about $15,000 and some change a year on the taxes. So if you need some guidance and if you need this calculator, do feel free to reach out. 408-515-1613, and we'll be happy to guide you through this process. Talk to you later.